Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that buyers were active down at the 63.75 to 65 area, and we ended up getting a bounce back up towards 81, which was where the breakdown really accelerated yesterday afternoon. And so far, we have seen some sellers active at that zone. So at this point, bigger picture, we know that we have been in this recent downtrend, but overall, now we're seeing a little bit buying coming into the other markets, and heading into the open, we're going to be using 76 to 78 as the micro bull bear zone. If the market starts holding above 76 to 78, that would just validate the overnight breakout, or at least the overnight breakout attempt that so far hasn't really had much legs to it. But if we do start holding above it, then we have to consider that we can get a move up to 84 to 86. That would be the next inflection point, and that's still a spot where sellers can be active. But the 78 level is really going to be important heading into the open, and holding below it will tell us that the overnight breakout is failing. And then on the downside, we can get a pullback to 70 half to 72 half, 64 half to 66 half. And the pre-market support zone is a minor support zone along the way. If it starts holding and then we start balancing near the highs, that could be an indication that buyers are still active in this range, but we're not expecting this to be a major inflection point or anything. So on the downside, if we fail at 76 to 78, we can quite easily go down to 64 half to 66 half. The prior close at 65 half, gap fill, and that is a spot where buyers could still be active. And if we break below the initial support zone, at that point, we have some support along the way, but really the major support below is at 49 to 52. So in the event of a breakdown below initial support, buyers could be active at 59 to 61 and 55, 56, and we have an open gap and naked VPOC at 52.75 and 53. But really the major support where we can get a decent buy response is 49 to 52. That's really a major inflection point, heavy area of acceptance from earlier, and at this point, in the event that we do head down there, that is a spot where we could see a pretty decent buy response, which could result in a decent, either short covering rally or just overall a pretty decent move back up into the prior range that we are breaking down from. In the event of holding above 76 to 78, 84 to 86 is the first inflection point, and that is an area where sellers could still be active because we're in this overall short-term downtrend. Sellers can be active basically at every resistance zone on the way up. So 84 to 86 is the first inflection point above 78. We've already seen a rejection so far at the 81 level, which is where the breakdown really accelerated yesterday. 84 is the start of that breakdown, 84 to 86. So first test could still attract sellers in the market, and from there we can still actually even fail and head lower. So 84 to 86 is really important. Above that, the next resistance where sellers can be active is 90.91, and then 94 to 96 is a key inflection point as well, because in this recent range, 94 is the major HVN, and that's a spot where sellers could also aggressively enter the market. If we break above 94 to 96, that would be actually an indication that things could really be turning around bigger picture, and we could be setting up for some higher prices. So this 94 to 96 is key as well. So those are really the main ideas heading into the open. So far, we are going to be very careful on long setups, be more active on the short side, unless we start seeing some really good momentum on the upside. So at the moment, all the overnight breakouts are setting up to fail. But if we do start holding above 78, then we just have to be a bit cautious, because we could be setting up for a test of 84 to 86, depending on how the market is shaping up in real time as we approach that zone. As long as there's no major upside momentum, like plus 1200 tick readings, then we will consider shorting 84 to 86 and look for a pullback to 76 to 78, maybe the overnight high at 81. And then if we start breaking 76, 78, that can become a a better sell idea. But the 76 to 78 is really going to help us determine whether the overnight buyers are really active and pushing higher, or if the breakout is failing. So that's going to help us establish our short-term bias. Bigger picture, sellers can be active on first test of every zone on the way back up, and on the downside, initial support, main inflection point, and after that the major one is 49 to 52. Keep an eye on the other markets as well. Even though ES pushed down into new lows yesterday afternoon, TF actually held its lows and did not make a new low on the day. And even in the overnight session, it has held up pretty well. So TF could actually lead the markets back up to the upside. So we'll keep an eye on TF, and TF hitting resistance at the same time as ES is hitting resistance could be a good way to time any short setups as well. So those are our main thoughts heading into the open. Let's see if sellers can still maintain control, and we'll take it from there.